The short-term price action has been consolidating tightly between the major $26,000 support and both the diagonal daily downtrend and the $28,000 major horizontal resistance. Could the economic data releasing today, being unemployment data and NFP, be the trigger for the next directional move? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're going to keep today's video nice and short and sharp. We're going to be focusing primarily on the smaller time frame price action and focusing on exactly what is happening and the key levels you need to be watching for a breakout and a breakdown, as well as directional macro moves. We're going to be discussing our diagonal and horizontal levels. We'll be talking about our technical indicators and what the price action is doing now, and of course inferring this to the daily chart to be able to predict when the next move will occur and what the next move will be. Before we get into the video, smash the like button, hit the comment button, and subscribe to the channel. We do daily videos for Bitcoin, focusing on the facts, the data, the technical and structural information, the news events, and economic data as well. You can also find us on Telegram. If you're interested in joining Telegram, it'll be the second link down below. You've got access to charts, updates, analysis, videos, information, educational posts, and so much more, guys. If you're interested in our VIP channel, you can also join our VIP channel where we post exact trading signals of entries, targets, stop losses, and more. More information about that can be found in the free channel itself. Now, before you do get into it, smash that like button, hit the comment button, and subscribe to support the channel. Like we said, we do daily videos, and all of our videos are focusing on the facts and the data. So, what will we start with today, guys? We'll go ahead and start off with the market data. So currently for the month, we are looking at May. We have actually closed out the red candle for May. We've closed around negative 6.98. And if we did watch our video the other day, you would know that the monthly candle close had to have occurred above the prior monthly open price, which is 28,486. We actually closed below that point, therefore actually printing a bearish monthly candle. This was not only a red candle, but in fact it was a bearish candle. This is what we call a bearish engulfing candle. So what does this mean? Well, it means we've established a downtrend. We have an established downtrend forming now in the monthly. Now, whether or not this downtrend will actually continue downwards or whether it will be short lasted, that is something we'll discuss today. But we can actually see we do have a downtrend now. This represents a shift in strength. And when we do see engulfing candles after strong moves upwards with consecutive green candles, it not only represents a shift in strength, but it represents a shift in momentum and direction. If we go ahead and look at the daily chart, we can see that this downtrend is very much active and is now represented by this downward trending black line. We'll come back and talk about that line later because that is one of the few key points that we're going to be discussing in today's video. Moving on from there, guys, we can see June, we're down 0.97 for the day. We are 2 days into June now. Again, doesn't really matter too much. If we do look at June, we're kind of split between bullishness and bearishness when we look at the historical months. We've had two really red months in June. We've had the negative 37% month, which was actually the largest drawdown we've ever seen for Bitcoin in history of Bitcoin for a single month, open to close price. 37%, and we had a 29%, but overall we've had a pretty big split between bullishness and bearishness. I don't expect this month to be an incredibly bearish month. I don't expect it to be a incredibly bullish month. I think it's going to be a month of decision. I think it's going to determine the next monthly move. I think it's going to determine where we're going to go see Bitcoin go over the next few months. Moving up, guys, we can see 24-hour liquidations are sitting at 55 million. That is down 46% for the 24-hour period. Moving on to the volatility index, we're not seeing too much happen here. We are still seeing volatility plateau on the 30 and on the 60. We're also seeing volatility plateau. It's been plateauing for quite some time. This is indicating a large move is incoming, right? When we see volatility plateau on the 30 and the 60, it suggests that there's a lot of consolidation, a lot of compression, and a lot of momentum reset occurring on the charts, and this will lead to a large move. So I do expect a large move to occur in June, but I do not expect it to be like a 30% move or a 20% move, but I think we're going to see a large enough move to lock in the direction that Bitcoin is going to move over the next month and into, June, July kind of period. Moving on over here, guys, we can see liquidations one more time are at this 74 million over here. And the majority of those liquidations have actually come from longs. A small amount has come from shorts. Looking at the DXY, we can see the DXY has actually come down a little bit. It actually rejected a little bit sooner than expected. We're expecting a move to 105 to 106. Nevertheless, it doesn't really matter too much because the trend is still very much upright, right? We do have an uptrend over here represented by the uptrending line, and as long as that uptrend remains, the DXY is going to continue upwards. As long as the uptrend remains, we will have this down pressure on the markets. We're going to be sitting underneath this downtrending resistance, as you can see over here, and of course, that is going to be this overall downtrend on Bitcoin. Looking at the DXY, if we do break below this uptrend, so if we do fall below the uptrend, we're going to be entering back into a downtrend, and that could push the DXY lower. And of course, if the DXY drops down, we can expect the markets to rally. Alternatively, the DXY does move up. We are still looking for a target of 105 to 106, and if it does break through that level, we expect a stronger move upwards to maybe even 109 to 110. Again, a lot of what happens with the DXY is controlled by economic data. It is controlled by the economy. It's very hard to predict from a technical level. We can look at horizontal levels, we can look at diagonal levels, and look at key reversals, but to exactly predict where it's going to go is a little bit harder. We do have economic data coming out today that does follow the unemployment data and NFP data. We can see the NFP data previous was 253,000 jobs. We can see the consensus and forecast is around 180 to 190,000. As always, guys, when we see rapid expansion in jobs, that is a sign or a leading sign of the economy moving too fast, and it can be an indication of inflation actually starting to rise. So any data above 190,000 is going to be bearish. The higher and higher it is against 100,000, so we got 200,000, 220,000, 240,000. If we go higher and higher, it's going to be more and more bearish. As the higher it is, the larger it suggests that inflation is back on the rise. Of course, if we sit between consensus and forecast, that is going to be neutral to bullish, and anything below is going to be quite bullish, but it's very rare we see anything below it. It's more likely we're going to see around 210, maybe 190 to 210. I don't expect a huge reaction on the higher timeframes from this, but do expect on the smaller timeframes a lot of volatility. The same goes to unemployment, guys. I don't expect too much of a change. I think we're going to come around 3.4, maybe a little bit lower, maybe a little bit higher, and I don't think it's going to impact the markets all that much. But the big one is going to be NFP. Furthermore, we do have the debt ceiling announcement, which is going to be on the 6th. It doesn't show up over here. That is going to be the big one for the markets, guys. A lot is going to happen. That is going to completely shift and move the DXY in a way that we haven't seen before. And again, if that comes out bullish, we're going to see the markets rally. Okay, if it comes out bullish, which it most likely will, we're most likely to see the markets rally. So we do have on the 6th something that could push the markets up. We do have to be aware of that. S&P 500, we are still at this resistance zone. Nothing really too much has happened. If you haven't closed the weekly candle above, close the weekly candle above, we go up to 4,300. Until then, we are in a rising pattern. If we do break toward the downside and retest this level and lose this level, we can expect the price to move down. Same goes for the Dow Jones over here, guys. We are retesting the uptrending support level, have not closed a weekly candle below it. We are still on support. So as long as we remain on support, we can still push upwards. If we do lose this level on the weekly, we can expect a move toward the downside. Again, a lot of this is determined by the DXY. And again, the DXY is heavily determined by the economic data, both coming up today and coming up in the future. Let's go ahead, guys, and talk about Bitcoin. And like I said, I'll keep today's video short and sharp for Bitcoin. We're primarily discussing the key levels, the key zones, and exactly what you should be looking out for both higher time frame shifts in direction / continuations and smaller time frame shifts in directions and continuations. So let's get stuck in. I wanted to briefly interrupt today's video to discuss my favorite exchange, BitGet. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than BitGet. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our Mega Whale promotion campaigns that we run every few months. Alongside that, guys, BitGet is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. BitGet also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, BitGet offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to BitGet. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And always the best thing to do before we get stuck into this is to identify the key levels we are looking at. So we'll start on the daily chart. Really quickly, the key levels we're looking at on the daily chart are going to be represented by both these diagonal and horizontal levels. I've gone ahead and annotated to make it a little bit easier. We have this over here on our right side, which we'll come back to, and we have this over here on the left side. So focus everything on the left, don't worry about the right hand side yet. What we have over here is our monthly support. This is our monthly support, our major monthly support between 18,300 and 20,000, meaning if this level is lost, we move into a macro bearish trend. Okay, we can see that crossover happens here. Perfect. We have our next support, which is our weekly uptrend support right over here. This is going to be our 24.4 to 25.2K level. You can see if this level is lost, we enter a daily, a higher time frame weekly bearish trend. Below that, or should I say above that, we have a bullish weekly uptrend. So currently we are in an uptrend, which is a bullish weekly uptrend because we broke upwards from the 25.2K level and we have been above that ever since. So we do have a weekly bullish uptrend. However, we have rejected from the 30,000 to 28,000 resistance, which is the monthly resistance. We have moved down from the level and we've created a daily downtrending resistance represented by black line. Therefore, anything moving below 28,000 and downwards, we have a weak bearish trend. This is a daily downtrend, but the weekly uptrend is bullish, and therefore we represent this as a weak bearish trend as the weekly uptrend is bullish and the daily downtrend is obviously bearish. So we do have a little bit of confusion, a little bit of indecision, a little bit of indecisiveness here between our weekly and daily trends, which is resulting in this consolidation phase that we are seeing. Looking more over here, we have our structural bearish continuation trigger, which will be sitting at 26 to 25.8. We'll come back and talk about it on the short term. And we have our bearish trigger, which will push us toward that structural level, sitting right at 26.55. You can see actually we retested that in the last 24-hour period. So moving from there, guys, if we do break above this downtrending daily resistance, that is when we expect the trend to flip bullish on the daily. And of course, if we flip bullish on the daily, all that does, it suggests the weekly trend is stronger, and that has a potential to push us through and upwards into our next resistance. That will push us above the 30,000. That will push us into our next resistance and turn us macro bullish. Of course, 30,000 is a very key level. Discussed the 30,000 in much detail before using that 4-year cycle chart. If you want to find out more information about the 4-year cycle and of course exactly what we expect, go watch yesterday's video. We cover it in a significant amount of depth, but more importantly, guys, is to reiterate, the 30,000 level is going to be the yearly resistance, the yearly support of the prior bull/bear run cycle. You can see it represented over here. In the prior cycle, you can see it over here, and the prior cycle, you can see it over here. Every time we break above 30,000, we end up rallying quite aggressively to retest the dotted trend line. The dotted trend line you can see on the chart right here, okay, right here, and finally right here. The dotted trend line represents the high point of the dead cat bounce. So we have our dead cat bounce, our high point, okay. We move over here, we have our dead cat bounce, our high point. We move over here, our dead cat bounce, our high point. In this instance, it represents 48,000. You can see every time we close a monthly candle above the red line, we move toward the dotted line, okay. Close above the red line, move toward the dotted line, close above the red line, move toward the dotted line. Therefore, $30,000 is going to be the monthly resistance, but also the monthly trigger for a bullish uptrend, a macro bullish uptrend. And that is why not only this daily downtrend is so important, not only is this $26,000 so important, but also that is why 30,000 holds massive significance. So if you'd like to think about this, we are on the fence currently between flipping into a macro bullish uptrend, which will develop into a bull run, or if we lose the support, continuing down, potentially destroying the weekly uptrend and entering a higher time frame bearish trend, and that will throw absolutely massive spanner in the works for the 4-year cycle and potentially the health of Bitcoin over the long term. So a lot of the stuff going on, a lot of decisions to go on, and a lot of significant things occurring on the chart. Now, if I do have to say for sure, I would say there is a slight higher probability we will see a break over 30,000. There's a higher probability we're going to see an eventual break. That is my personal opinion. The charts do not reflect that as of yet because we are in a downtrend, okay? We are in a downtrend, but while the weekly uptrend stays intact, we do have a higher probability of an eventual break upwards. Not only do we have the weekly uptrend, but with the 4-year cycle do validate that, and potentially the debt ceiling announcement is going to be bullish, which could push the prices upwards. Now, my personal opinion and my actions are two different things. As you know, I bought Bitcoin at 16,500. I sold at 30,000. I have yet to rebuy, and I will not yet rebuy until I get a monthly close above 30,000. On the short term, I am still shorting as the trend is down. Now, I do expect an eventual break upwards, okay, and I can predict that using the RSI. If we use the RSI and drag it across, we can see when that RSI actually pushes upwards and breaks through here, that is going to be confirmation that this consolidation phase is over and the price is moving upwards. This overall is more similar to a bullish consolidation than a bearish consolidation. So we do have to keep in mind. Now, if we do lose that $26,000 level, that will validate the next move downwards, and we're going to see a move to retest that weekly support. Moving on, guys, let's go ahead and get into short-term. Short-term price action, a little bit different. I'll go ahead and zoom out so you can see that downward daily resistance is that diagonal over here. So that is that same diagonal level. Let's talk about our zones first, and then we'll get into everything else. So this is our horizontal range. It's a little bit messy because there's a lot going on, but we have a few things to discuss. This is our horizontal range over here. This is the range of price action we've been moving in the literally last 20 or so days. We have a liquidity zone at this range between 26,500 and 26,440. Now, if you do remember, 26,500 is of course the daily bearish trigger. So it is a liquidity range for the bulls. It is a bounce point, like I said, and we did see a bounce from that level in the last 24 hours. Moving on from there, guys, we have our range high resistance, which is 27.8. As you can see, multiple rejections from that point, a key bullish trigger point. We had deviation below, deviation above, we're pushed back below. Our major support, which is sitting at 25.2, our major support, which is sitting at 26,000 to 25,800. If lost, will result in a move toward 25.2, which again is going to be that weekly support. Moving over here, we have our range low support. If we lose this range low support, it's sitting at 26,300 to 26,350. We're going to see a move towards 26,000. Again, for us to retest this range low, the price needs to break and close below 26,500, which of course is going to be that liquidity zone and the daily bearish trigger. So a lot is going on here in the short term. Until then, we are neutral. We're in a horizontal consolidation, which is neutral. Now, we have a downward sloping trend, which is this downtrend. We have a horizontal consolidation. We are getting a degree of compression as the distance or the height between the current price action and the downslope is shrinking. This is actually bullish consolidation. However, we are in a downtrend. We can have bullish consolidation in a downtrend, very possible. It is exactly what we're seeing here. It represents a possibility for a price to push upwards. All we need is a trigger for that to occur, and the trigger for that to occur could be economic data, could be debt ceiling announcement, it could just be standard price action over a period of time. However, I would be expecting a move to occur soon, and I'll be watching these high points. So range high, range low. If we lose this level, we are going to go much lower. If we break above this level, we're going to go much higher. Look at our daily levels, look at our short-term levels, and look at our trend biases. So the trends over here, we can take a look. If we're broken from the top side down from this level, which we have a range bearish trend. So we are currently in a range bearish trend. However, on the smaller time frame, we are above the POC level. So we have a downtrend, but it is a weakening downtrend as we are above the POC. So currently on the short term, we should have a bearish bias, but we have a weakening downtrend, and that weakening downtrend is represented by this black line, which is our downtrending resistance. If broken above, we enter a range bullish trend, which could take us to retest this resistance zone where we will not push upwards again unless broken above. If broken above, we take a move towards 28,000. Watch that. On the short term, The range bearish trend or the downtrend should be assumed to continue until we invalidate it, which is going to be breaking above that downtrending resistance. Until then, we can expect the price to move downwards, retesting our liquidity zone, which is going to be 26,550, and if broken, retesting the range low, and if broken, retesting the support. You can see as we move lower and lower, the bearish strength gets higher and higher, moving from a range bearish to a bearish to a strong bearish trend. On the upside, the same thing goes, guys. If we break above the downtrending resistance, that will give us confidence above not only 28,000, but of course a downtrending resistance which will push us into a daily bullish trend and further reiterate the fact that we are in a weekly bullish trend. Thanks for watching today's video, guys. I hope today's video has summarized the range you need to be watching at, the key levels. We're not going to get too much into the technicals today because, again, we have economic data coming out very shortly, and economic data is going to shift. It's going to flip the price action on its head. It can move and bend and twist price action any way, shape or form, no matter what the charts are saying, because economic data is a driver of price action. It moves price action. TA, structural levels, are just predictive levels. Economic data will always take precedence. So watch the economic data, make your decisions based on that. I would highly suggest between now and the 6th of June, like I am personally doing, reduce your trading capital, manage your risks, take profits earlier, set your stop losses, and make sure you just use less capital, because right now the markets are no environment to be trading at a high volume. We are seeing massive high risk environments play out. We're seeing long horizontal drawn out consolidations with deviations, long fake out wicks, quick moves down, quick moves up, and a lot of this is on the back burner as a result of the debt ceiling announcement, which will be coming soon. A lot of people are anticipating, a lot of people are preparing, a lot of people are front running. This causes an environment of speculation. And when price is driving based on speculation, it becomes more volatile, more sporadic, and less predictable. And therefore your edge when it comes to a trader, if you use TA, if you use structural levels, is going to be weaker. You're going to have a lower win rate, which is fine because you can have a very low win rate and still be profitable if you take good risk return trades. Manage your risk, manage your trades, manage your positions. Do not blindly gamble in these environments. Thanks for watching, guys, and make sure to check out the Crypto Academy. Again, the links are down below. Like the video, subscribe to the channel, and so much more. Thanks, and I'll see you guys tomorrow.